What's up, YouTube? It's Joe Catchpolia. Today I'm going to do something a little bit different in my video. I'm going to talk about why I've really settled, especially when I'm on Lofty, why I've settled on this discounted token strategy, why it's the one I keep going back to. Despite not necessarily being what the platform was built for, I actually think that when you stop and really look at the way the platform is made and the behavior of some of the other people on it, and even the people that have brought properties to the platform. I think it's actually, the perfect type of property or the perfect platform for true value investors. If you don't know what that is, one of the things I wanted to do today is just sort of back up and talk a little bit about my thoughts on investing in general. I know I did a little bit about this one other time, but one of the things I was talking to my team today in our team, if you don't know who my team is, I'm a real estate investor and have been for a very long time, but I run a small real estate agent team in San Antonio, Texas. Our team only works with investors, or primarily. Every once in a while, a homeowner will slip through. But a big part of my job in that team is to really keep us focused on um, finding the good deals. And part of being able to find good deals is defining what those good deals are and thinking from sort of first principles about like why are we investing in real estate? What's the goal? What is in that some that goal might change from one client to the next. But there's only certain sets of goals that you can satisfy with specific strategies in real estate. And I think the same is true with, all these different online platforms that I'm looking at. There's certainly some are made and work much better for certain strategies than others. Um, Lofty, I think, is one of the most interesting because it's the only one that has a really good deep like trading on the secondary market. Landa seemed like they did for a little while, but I think I might have been late to the party there, and it seems like it's very broken now. So that's why I put money on there. I took it off almost immediately. Um, Arc 7 also has this ability to trade, but it seems much less like real markets, and it's not a whole bunch of properties. But Lofty has, 150 plus or minus properties, tokens that range anywhere from, low teen pricing all the way up into the 70s on some days. And so there's really the ability to trade on there in a different way than others. And so I wanted to just sort of talk about, there's a lot of different ways that people trade and invest. And I want to just give you some background on the way I think about these things, and why, because sometimes I think there's a lot built into some of the comments that I make about, what we want to do or why we would do this. And I think like, I'm hoping this helps, some people maybe understand me a little bit better. Also though, too, I'm always open to learning more. I was actually reading something from this book, and this is why I used it as, um, the part on this slide here. I think if you haven't read it, it's the most important thing by Howard Marks. Um, and if you're relatively new to investing, I think that you will learn more from that book than any other single book that I can think of. It's not specifically about real estate. He actually, he talks a lot about securities in there, but he's actually a very famous and successful investor in debt. But I steal a lot of his ideas. He thinks him and several other people, but I think particularly for the discounted token strategy, a lot of the way that he looks at the world really makes a lot of sense. But so, okay, what are we talking about here? Um, we're talking about analyzing the investments, and there's really two big main schools of investment analysis. You have a fundamental analysis, that you're really focusing on what is this asset worth? What's the actual value of the asset? When people are trading stocks and bonds, it's the companies. On Lofty, we're talking about what's the property worth, right? If we get down to the property level, what is that worth? Separate from the tokens, right? And so I think that that's important. Most of the time on most of the properties on there, if you bought all the tokens at the current trading price, they're not going to equal what you would net if you sold that property in real life. On a lot of the properties, they're going to be lower. On some of the properties, that number might be more. Um, and so that fundamental analysis, you'd think, that a lot of people, they just take it for granted. Like that's what you look at when you're investing. But a lot of people really are doing technical analysis. They're focusing on price trends, the way that prices move. If you talk to anybody that trades crypto, it's almost the only thing they'll talk about is technical analysis, because there is uh, virtually no way to come to what's the intrinsic value of a lot of the coins, right? Because they're not being used for anything. They're not, it's very difficult to say what that intrinsic value is. And so you see a lot of focus on technical analysis. It's also really popular with people that trade stocks. There's all different sorts of technical analysis. To me, I really think technical analysis, it's basically astrology for investors, right? It's like, um, and this is just my opinion. Again, like everything in my videos, it's just because that's the way I look at the world. It doesn't mean that it's the right way for you to look at investing. You definitely want to do your own due diligence on all the platforms and all the properties. Yeah, I do have very strong opinions about it, about a lot of these things. It's worked well for me over the years that I've been investing to think the way that I think. But this is a new platform for me, and so it is. It's not necessarily um, going to be the one that's going to create the best outcome for you. Especially, it'll depend a lot on your execution too. But so, like, technical analysis would be, on every single one of the properties that you have on there, you can see what the price movements look like, and you might be able to get in there and say, okay. And some of these that are actually like set up in a way that maybe there is some opportunity here, right? Because you can see, like, okay, you have the same up and down over and over again. Um, some of that is the way that they record the purchases and sales differently, with the way um, the way the fees are handled for a purchase versus a sale, especially when it's interacting with the liquidity pools. But if you wanted to do technical analysis, you do have the price information. Now, I think all of them are very thin markets, right? I mean, there's not a ton of trades, and so it's a form of investment analysis that I don't believe in to begin with. And then on top of that, I think in a markets like these, it's probably even less well suited. But I want to at least explain what it is, right? It's like it's when you hear the people talking about trend lines and talking about the candles, and basically looking at prices and showing, okay, it's gone up for this long, and that means it's going to move, and looking at cycles. um, and it is. I mean, it's something that a very long time ago I dug into a bit, and I'm certainly not an expert, but especially for this platform, I just don't think it's the right move. And so, what I'm doing is really, all the time when we're doing due diligence, when we're looking at the properties, what we're really doing is fundamental analysis. And I think there's two different ways. Well, I think that. I mean, I'm pretty sure, I don't know, maybe there's some other schools of thought too, but the two main ways of fundamental analysis are really broken down into, like, value investors and growth investors. Value investors are looking at, what is the actual value of the underlying asset. And so, like, when it's stocks, it's tough because you're having to value the prop or the business. But for what we're doing with on Lofty, it's just trying to get a value of um, the property itself, net of any unpaid bills, plus any operating reserve. And so you would just be looking at the price today of the token versus the value today. And you'll see in a lot of my videos, that's really what I'm focused on. Like, I'm buying certain ones, and that's what I spend a lot of time talking about, right? And there are other things, but that's the main point of value investing versus growth investing, where you look at you're looking for, typically when it's companies, you're looking for a company that the price that you're paying today is a good value. It's still comparing your real world, um, the value of the business. But what you're really looking at is not necessarily that I'm getting a great discount today, but that I'm buying something today that I think is going to grow. It's going to grow. The income's going to grow. The value is going to grow quickly relative to the rest of the market. And so, value is, it's not completely ignoring the future, but it's really trying to say today's value versus today's price, where growth is more looking at, well, what is today's price versus the value I think it's going to reach in the future. Um, and really just based on the way I framed those two things, you can probably guess again, I am much more of a value investor than a growth investor. When I first got into real estate, I worked for a couple of public REITs, and my job was to make predictions about the assets that we bought and what they were going to, the cash flow they're going to spit out and what they're going to be worth in the future. And I do a master's degree in land economics and real estate, which was primarily a finance degree, even though it doesn't sound like it. But spent hours and hours in Excel and making predictions. And one of the things that I learned from, one of the older guys I worked with is the only thing true of all financial models is they're all wrong, right? Like you're just never going to put together a model and have it, have that property performance match it perfectly in the future. And so, um, I think there's a lot more guesswork that goes on with growth investing versus value investing. And so again, I mean, that's what's leading me to the discounted tokens versus buying some of like the Madison properties, which I think, perform really well. I expect them to continue to perform well. And I think that, you've seen some growth in the prices of the first couple that are on there. And, I don't think it's wrong to make a guess that the others will perform similarly well. But it is, it's a very educated guess, but it is still a guess, right? You're having to place something on the future. Now, when we're looking at value investing still, even though we're trying to figure out what that asset is worth today, we're still guessing because we still have to find that buyer that's going to pay that value, right? But, that's just to give you a little bit of an idea of the types of fundamental analysis that you can do. And so what does that really mean for, what we're doing on Lofty or what my strategy has been, buying the discounted tokens? It's led me to these properties, right? Like these are four that I've put, that I've experimented with the most. Like I said, I'm not putting a ton of capital into this platform yet, but the properties that I am buying are these ones where, the real world price of this property, like for example, this is the Keeler property that I've been talking about. It is, it's under contract and we're negotiating repair concessions. And, my average purchase for these tokens is somewhere around 24 or $25. And it appears that we're going to sell it at a price where we're going to net somewhere around 36 or $37 per token. And so, and that's over a pretty short period of time. I only started buying those tokens maybe at most 3 months ago, somewhere around there. And so that's one that I think that I got right. And, these are three others that, in my mind, if you add up all, if you bought every single token on today's token price, you'd come up with a price that's significantly less than what I think the property is going to sell for in real life. Whether or not I'm right about that, it is again a guess. But, one of the things that make me really like Lofty is, you're buying these tokens, but it's not like buying a stock, right? It is reasonably knowable the value of this property, the value of this duplex here. It's reasonably knowable by looking at comparable sales, by looking at the real estate market, right? It's not like me trying to say what is Apple stock actually worth, right? Like there's so much I would have to know about the business and their balance sheet and their future plans and there's so much that you have to know about it to really understand the value. But on here, that value is like I said, it's reasonably knowable. And then the assets, there are some assets that I think are grossly mispriced on the platform. And then one thing that I should have added on here and I didn't, I'm going to stick it on here just in case I do this again, is that you can push for real world asset sale, right? I mean, we have the ability to sell these assets in real life, which like it's very difficult, unless you're I can't think of the guy's name, but unless you're one of the real big activist investors, you can't just go buy stock. Like I couldn't buy stock in Apple and then be like, I think it's worth a lot more than what the stock price is. Let's find someone to buy Apple from us, right? I mean, there are very large investors that do that and have made tons of money doing it. But the Lofty platform gives us the ability to do something very similar, where we're buying fractions of the entity that owns these. And yeah, maybe we can't affect the actual price of those tokens, right? Maybe the market for them, it's just, like I said, I mean, there are some that are just what I think really grossly mispriced on the platform. But we can buy those and then, you know, propose a vote to sell the property. And that's one of the things, you don't just automatically get to sell it in real life. You have to convince some of the other owners to do it too. But if you're able to do that, you can realize the value much quicker on this platform than you can. When you're a value investor in the stock market, you have to buy and then wait for the rest of the market to figure out what you already know, right? Like you figured out, okay, what the value is of that business, and you bought it at a great discount to that price, but the rest of the market needs to catch up to you, or else you're not going to be able to realize that discount that you got, right? Like you're not going to sell it until the market catches up. Here, it's completely different, right? You have the potential, there's the ability to push for that real world sale, so that the property is sold, it's liquidated, and you can get paid out right away. Now, in both cases, it only matters if you're right, right? Like if I'm wrong, if the property is really worth half of what I think it's worth, well then I'm going to lose money either way. But if I'm right and I'm able to convince the other owners, hey, let's sell this, I can take something that I bought with a deep discount and turn it into money, like realize that profit very quickly, in some cases. And that's what it looks like we're going to be able to do with Keeler. There was one other one that I've already been involved with that this was the case. Um, some of the others that I'm purchasing, these are just some that I had already stuck together in this picture for something else. But some of the others that I'm looking at, I'm just, as I get more and more confident with this strategy, I'll be um, waiting until I get bigger and bigger positions in the properties, before I push for a sale. But overall, I think that's why I say, like, it's almost as if Lofty is built for value investors, right? You have, like I said, the real world asset. It's very knowable. You can very much know what is the underlying asset worth, um, and you can realize that by making you can actually get paid for that by making a sale of that asset once you've accumulated some of the tokens. And then again, it's a platform where you have a lot of people that are not using it in this manner, and they're very much ignoring the real world value of the tokens, and they're just looking. They're buying based on yield, which I didn't even really talk about, but um, and I think a lot of them are really mispricing because they're like, oh well, I'm getting $0 today, even though the value in that property is there. So that's really all I wanted to cover. I wanted to talk about, hopefully help you to understand my thinking a little bit better, why I'm sort of almost obsessed with this strategy now on Lofty, right? Like I just keep going back to it. I'm trying to, I really am trying to share my knowledge about real estate and underwriting deals. And so I love it if some of the really nice STRs or some of the, more interesting, there's a large multifamily property that's just come to the platform. And I'd love to say like, hey, that's a great deal. And let me show you the numbers on it. And, um, that's the way to do it. But it's not the way the platform is built, and the structure of the deals, and everything about it is just really pushing me towards this strategy, as far as where I think, where I just see the most return, with the least risk coming into play, right? And one of the reasons I think in value investing you have very little risk is, if all I'm trying to do is get a discounted property, um, if I'm wrong, in many cases, what I've done is bought a property for what it's worth instead of buying it at a discount, right? I mean, I'd have to be much more wrong to overpay for it, right? And so, uh, the downside because of that strategy to me appears to be much lower. Now, if you're paying as opposed to if I'm paying, market price or a premium for a property, because I think that property is going to do even better in the future. Or because that property is, I'm predicting it's going to provide this great yield, even though there's all these ways that yield can go away. Um, I think that it's just, from a risk reward perspective, it just seems like the better strategy again. And so, as much as I'm very much in general, have looked at real estate as a long-term investment, um, that's what that's how I think. I think real estate in general should be a long-term investment, but on this platform because of the way that things, because of the way it works, I think that's not necessarily the case. Um, I've been talking a little bit about Mogul, and I think that is probably the way they're set up is, well, one, it's more forcing people into making long-term investments, because there isn't any liquidity function at the moment. Um, I think that's one that I've gotten to like more and more the more I dig into it. It has much less of a track record though, so like before you jump into that one, just really make sure you do always. Uh, I think I've told you to do that enough times that you realize that I'm not trying to give you specific advice on what you should be buying. In any case, I do have links to all my favorite sites below as far as places that I've put money on and that I'm investing through. So if they are all affiliate links, I think the Lofty one might be broken right now. It'll get you to the site, but I don't know that they're actually giving you a token. It seems like they're reworking that platform. I always forget to say, please like and subscribe if you haven't already. That's really all I wanted to share with you. I should have closed Discord. You can probably hear that, that ding in the background. Sorry about that. But anyway, as usual, sorry I'm not better looking and that these videos, are not edited, but it is just, I'm really just trying to get my ideas across and to share some of my experience. And I'm hoping that, a video like this, um, will just help us understand each other a little bit better because I know a lot of the stuff, a lot of this thinking is already built into my brain when I'm, evaluating properties, but I think it's probably not being conveyed every time I do a video. Uh, yeah, if you'd like to see more like this, where I'm just talking about, my thoughts on investing in general versus just digging into property, please let me know. Because it is, I don't know, to me, this seems a little bit silly. But whenever I do something like this with my team, I realize like I am always assuming people know a lot more than they do about what to me feels like the basics of investing. But, basics are different for different people. It depends on where you get your education from, right? Anyway, I think I'm done rambling. Until next time, I am going to keep making mistakes so that you don't have to.